Hey, what's up everyone? Hope you guys are all doing well. So today I'm going to be going over a strategy that I use on a weekly basis that I'm currently entered in a trade on, and walk you guys through step by step how to enter it if you do want to go ahead and trade using the strategy for some consistent weekly income. Before I get started, just want to let you know I'm not an investment or financial advisor, and these videos are for entertainment purposes only. Also, please go ahead and give this video a like and subscribe to the channel. Alright guys, so like I said, I'm actually entered into the trade, so I'll be going through what I did on Friday and my prediction for next week and my overall entry and exit strategy for this trade. So before we begin, just want to let you know that this stock that I currently have up, it's a ETF. It's a triple leverage ETF. So triple leverage just means that it's 3 times as volatile as the regular QQQ. So QQQ tracks the 100 companies, tracks 100 companies within the Nasdaq. So it's 100 tech companies, right? So this is basically the tech sector times 3 times the volatility. Basically, that's what this stock is. So I like this stock. I actually ended up accumulating over 100 shares. I actually sold I sold a few shares earlier this week for a bit of a profit. So I sold 25 shares, then I sold 5, and then I sold 23, all on November 4th and the 5th. So basically what happened with this stock is it really dropped this past month. This was due to like increased virus case count and also bad tech earnings. So I ended up scooping up some shares to get my average cost to 132. So I sold off all. I had about 154 shares. I sold about 54. I sold 54 of them and only kept 100. So why did I keep 100? So when you have 100 shares of every for any stock for that matter, you're able to sell covered calls. So covered calls is basically you're saying that, hey, by this time next week, the stock is not going to go over this particular price that I choose. Now, if it doesn't go over that price, I'll get a weekly premium, and I'll show you guys exactly what I mean. So I'm actually entered into a covered call. I'll go through that as well. But first, let me show you guys how you can do it yourself. So you want to click on trade options. You want to make sure you have this to sell and this selected at call. So next, you want to go ahead and choose a expiration date. So I have the 13th, which is 1 week from now. And you can see the current share price is 151.75, right? So basically what I'm saying is, hey, by this time next week, the stock is not going to drop below whatever price I want to pick. So you can pick 157 and you'll get $365 if the stock finishes below 157 by the 13th. As you can see, I have one open. So I have one open for the 160 strike price. So basically 2 things can happen. One, like I said, stock stays below 160. I collect my $271. That's scenario 1. And then you can go ahead and do this on a weekly basis. Scenario 2 is, let's say the stock on Monday or any time before the 13th shoots up over 160, let's say to 165, right? So basically what I would have to do, I would be forced to sell my 100 shares for $160 each share price. So I would have to sell 100 shares for 160. However, 2 things happen. One, I do get this premium. I get $271 because the person is buying this contract. And second, I get to profit from the capital gain. So I get to profit $8.25 for each of my shares, right? Because the stock price is increasing. So what I'm trying to say is, for me, in my opinion, this is a win-win scenario, right? Because I'm further away from the share price. So even if it does reach it and I'm forced to sell my 100 shares, I'm cool with that. But most likely, we had a huge run in the stock this week in the tech sector. So I do think things are going to stabilize and stay around maybe 155 or maybe just 158. I don't think it's going to skyrocket to like 170 this week. So My strategy is I'm going to hold on to this. If it goes up, I'll go ahead and sell it. If it doesn't, that's fine. I'll collect this and I'll go ahead and do this on a weekly basis. So you want to go ahead and choose the strike price. As you can see, it says short a call. You want to hit continue. You want to go ahead and enter 1 and go ahead and enter the limit price, right? So I already have one open, but I'll just show you guys how you can go ahead and place the order, and where it tells you that what your collateral is. So your collateral, whenever you're selling a covered call, is going to be your 100 shares, right? So as you can see, I don't have another 100 shares, right? So it says you don't have enough shares. It's because I already have one open, right? So for me to enter into another trade in selling covered call, I would have to have 200 shares, which I do not, right? So let's go back and let's actually go to the one I have open. So this is the one I have open, 160 strike price, expiring on the 13th. So basically what this market value means is how much profit I can gain on this trade. So like I said, if it expires, I'll get to keep that total $271. In this case, I was credited initially $270. I'm actually down $1. So I have opportunity to recover everything, which is $271. And the max I can make on this trade is $270. Now let's say the stock stays the same or the stock goes to 150. Let's just zoom on Thursday, let's just zoom on 11/12, which is a day before expiration. The stock is at 150. If you do want to go ahead and get out of this trade and take your profits, what you want to do is you want to buy to close. So I'm showing you guys how you can close this trade. You want to go ahead and enter 1, and then I'm assuming at 11/12, and if the stock is at 150, this contract is going to be worth around maybe 0.5 or 0.75, right? Let's just go 0.75. Let's just go 0.7, right? All right. So basically what this is saying is I have to pay $70 to release my collateral, right? So your released collateral would mean you get your 100 shares back. But look here. I actually paid $70 because I profited $200, right? Because remember, I gained $200 on this contract. So if this goes to 0, I get to keep all 100% profit. Now, if this goes to, let's say, 0.7, 270 minus 0.7, 270 minus 70 is $200 profit. So let's say if I do close it at 0.7, I actually profited $200 off this trade, right? And then I can get out of it a day early, right? So that's just a way to close it. Honestly, I'm not going to close this trade. I'm probably just going to let it ride. And if I'm forced to sell at 160, like I said, I'm fine with that. Or if it stays below 160, I'll go ahead and let this expire and collect the entire 270. Alright guys, so this is what I'm doing. If you go back to the share or the stock and look at the share price, the 3-month, my strategy with this is keep the 100 shares unless they get sold off until I reach that max 174. So like I said, I don't think this is going to hit the max highs this upcoming week before the 13th. But I do think in the next month or so, we're going to climb towards that high of 174 as the tech sector continues to get more and more momentum. But yeah, so guys, that wraps it up. Hope you guys enjoyed the video. Hope you guys learned something. Go ahead and leave a comment below about any other option strategies you guys do, or your favorite stock, or anything else, or any questions you have. Just leave it in the comment section below. Make sure to like the video and subscribe to the channel. Other than that, thanks for watching.